Every founder in the UK feels it. That sinking feeling, the rules have just changed again. And this time, it's not a warning. It's a direct hit to your wallet.
I am introducing the High Value Council Tax Surcharge in England, an annual £2,500 charge for properties worth more than £2 million.
So by the end of this video, I am going to show you why it becomes urgent for founders to leave the UK now, and what these changes mean for you and your business. Let me be crystal clear about what the 2025 budget actually did to the UK founders. This wasn't a minor adjustment, it was a targeted strike on entrepreneurial wealth. Chancellor Rachel Reeves has now confirmed a long freeze to income tax threshold instead of exit rate hikes, locking more of your future earnings into higher bands every single year. On paper, headline tax rates appear unchanged, but in practice, this is a stealth tax that quietly drags more of your income into the system without a single announcement of raising income tax. And at the same time, new and higher taxes on saving and dividends are being introduced, meaning that as a founder, you are now twice hit. Not only when you earn, but also when you save and invest. The budget also increased the pressure on capital and business costs. Businesses' rates are being re-engineered so that larger and more valuable commercial properties carries a heavier burden, which directly affects scale-ups, warehousing, and high-value operations. On top of that, ESI reforms and higher taxes on investments income reduce the benefit of using the one vehicle that was once a safe harbor for entrepreneurs and their cash reserves. The message is simple. The government needs money, productivity is weak, and you, not the state, are being positioned as the primary funding source. Founders are no longer asking if the UK is getting any harder. They are asking how quickly they can leave, with new property surcharges on high-value homes, frozen thresholds that drag more of your income into taxations, and constant rule changes.
And now be certain that we're never going to have to do a budget like that again.
Planning beyond 2 to 3 years has become almost impossible. And you know exactly how frustrating that is when you cannot predict your tax exposure or how confidently invest or even exit on your own terms. As if that is not enough, the government has now introduced tax on electric vehicles, a charge on the miles you drive in a car that was supposed to save you money. And when even the green incentives are being taxed, you can see the direction of travel. The talk around everyone is doing their bit
Each of us must do our bit.
has turned into real fiscal measures that fall hardest on founders and high earners. And this is why serious entrepreneurs are already leaving. They can see that today it is property surcharges and new mobility taxes, but tomorrow it can be exit taxes, wealth levies, or draconian rules on selling shares or disposing of property. One of our clients moved his operations to Dubai, and that single decision saved him 7 figures over time. Not because of clever tricks, but simply because he left a system that saw him as a targeted rather than an asset. And he's not alone. Even Nick Stornosky, the billionaire co-founder of Revolut, moved to the UAE for the exact same reasons, making it urgent for founders like you to leave the UK. But relocating is not about running away. It is about upgrading your strategy. Dubai has become the first choice for many UK founders because it combines zero personal income tax with global connectivity. It's a pro-business environment with a government that openly competes to attract entrepreneurs. And when you replace uncertainty with a clear and stable framework, long-term planning becomes possible again. For founders who prefer to stay closer to Europe, Cyprus and Malta offer low corporate taxes, favorable treatment of dividends and foreign income, and access to the EU's legal and financial infrastructure. Singapore remains a top choice for those who want ultra-efficient administration, no capital gains tax, and a globally respected financial system that treats successful founders as a partners in growth and not as cash machines. The wealthy are not just changing where they live, they are redesigning their entire structure. And the smart move is to separate where you live and operate from where you hold and protect your assets. This is why so many founders now run their operations from hubs like Dubai for tax efficiency and international reach, and then they use jurisdictions like Cyprus or Malta for holding companies to optimize dividends, asset protection, and EU access. This is wealth architecture, the process of building a structure where your tax, legal setup, lifestyle, and business strategy work together to help you grow. You are not trying to hide money after leaving the UK, you are engineering a setup where the rules finally reward the value you create. And when it is done properly, relocation stops feeling like an escape. It becomes a controlled and strategic evaluation of your life and your business. If you are a UK founder and this budget confirmed what you already suspected, then staying is becoming the most expensive option. Then now is the time to plan your exit while the window is still open. For a proven, well-engineered strategy trusted by more than 3,200 business owners, use the link in the description or visit emifast.com to book your free clarity call. Our expert advisors will help you choose the right jurisdictions and the right structure tailored to your goals and your business. If you found this video helpful, subscribe, like, and share it with someone who needs to see this. Also check out our playlist for more content on tech strategy, business setup, and global opportunities. I am Nariman, and I am business consultant at Emifast. Stay smart, stay strategic, and do not wait for the next budget to decide for you.